So we're going to shift gears into section 2 and talk about RevPAR Index. And Andrew, I'll let you take this slide.
Okay, so I think what you're about to learn is arguably the most important metric, the most valuable thing you can know about your business. And this is eventually, I would argue, a metric you should know offhand. And I have to give credit to Heather and her team. They're probably the best in the game at this. Heather's going to walk through a real example here of how RevPAR Index is leveraged to understand your performance and to find your strengths, find your weaknesses, etc. I do think this bleeds into a little bit of, it's going to look initially like quite a bit of numbers thrown at you, but within a minute, it's going to make sense, I promise you. And then it's going to be the thing that I would encourage people to continue to drill down on, your RevPAR Index. And the other thing that Heather really did a nice job of, she just set us up for this because, build out these comp sets. We're going to be able to leverage that for a RevPAR Index score here. But please lean in. Heather's the best in the game at this. She's going to share a really important metric. And Heather, I did add this slide because I do think it's a little advanced, but Heather, take it.
Yeah, want me to go? Are we ready? Okay, you're so funny. Yeah, warning. No, we're going to break it down. It's actually really simple math. So this is what we do to help our partners. We help you develop this reporting with these layers. And the Key Data Wheelhouse partnership is a great example of this because you might find that it's important for you to create your views using data, say, from those two sources, from Key Data as well as from Wheelhouse, right? Or other sources, and how you think about your views, what is impactful to you, we help you get there. So here are the components. So, and the definition. An index is a relative score or a ratio between two metrics. In short-term rental, we use an index to measure your performance versus your CompSet or market. When set up properly, it should illustrate your performance versus your fair share.
Tell me more about that.
Yeah. And on the next slide, we get into it, right? So if a really easy way to say it is if there are 100 homes in the market and there are $100 of incoming revenue, you might say, well, each home gets $1. Right? Should get $1 of that revenue. But if your home got $10 of that revenue, then that home just did 10x, what it technically should have. That was really simplified. We're going to get into it more, but it's the concept of all the demand that you had access to, did you get at least what you should have gotten, or did you get more than it or less than that? And there's a way we build that view for you so that you're really clear on what I considered or what I believed was my demand opportunity and what did I capture. And ultimately, index is, did you go up faster or slower than your CompSet, your market, up or down? And it helps you quickly see that. So the calculation is really easy, right? It's just you versus market, OC, ADR, RevPAR. And then it's 1 is the metric of fair share. If you got it, you got exactly as much as you should have. If you did less, or if you did more than 1, you got more than you should have, and less than 1, you got less than you should have. So this is where the rubber hits the road. So I know this is a lot of numbers on the slide. This is an example. Yeah. Do you want to jump in, Andrew? Go ahead.
So you're telling me, Heather, this is, if this number's going up, my strategy is working. If it's not working, right? And
yes.
Yep. And then anything above 1. So is anything above here is just illustrating, even if I'm above 1, if my number is not going up, is it still fair to say my strategy is not working?
Yeah, that gets into percent change and percent share change, which we'll show you. Mm-hmm. And then in the other example, we'll talk about when you really overperform, it's hard to hold on that lead. So the reality is your CompSet may close the gap, right? Doesn't mean you're still not winning. You just might not be winning by as much. Mm-hmm. So, and we'll talk about how occupancy, obviously you have ceilings, but how does it work? So in this example, this is last year. You did 60% OC, the mark did 40. Obviously you did better. Your index was 1.5. Again, that's you divided by market, right? That was our calculation now. ADR, not as high as the market. So you did 0.8. You didn't quite get your fair share in rate, but ultimately this was a winning strategy for you. You did better than your fair share at $60 RevPAR versus the market at 50, or CompSet, right? Whatever your view is, but we believe this is good benchmarking. We've done the work to create the views that are right, that are best fit. So what happens in the next year? So that's what we did last year. This year, as comparison, so call this, just full year. You grew your OC. You went from 60 to 65. The market also grew OC. They went from 40 to 50, which meant your gap, right, in OC exceeding market got lessened. So your index went down to 1.3. ADR grew for us. ADR grew for the market, but the market grew faster than us in rate, so we dropped our index to 0.77. We still actually ended with our fair share. Same RevPAR as the market. Great. But ultimately, did we do well? No. We, lost stock a little faster. We didn't grow as fast in OC. We didn't grow as fast in rate, and ultimately our overall index did drop. So we didn't keep our same lead on the market. Now the why and the what, right? That's all the underlayers of like, what do you do about it? But if you didn't see this, you might think you did well. You grew year over year. And if all you're comparing to is your own year over year growth, or you had a number you were trying to target, like all I want to do is grow X percent, you achieved it, you might just think you did well and you're happy with that. If you didn't have these views of like what was possible. So this is an example of a partner where what you're seeing here is reporting views that Richer Logic helps produce. So this is our, this is a view of, Q1 COVID, our partner, made some conscious decisions to be a first mover in lowering rate. The risk in lowering rate, right, is always, am I going to lower rate and will it drive enough occupancy to make up for any rate shortfalls? So how do we measure that? In this case, you can see they actually have a rate below 1. You can see this red here, kind of in this first quarter. This is versus same time last year. They actually did have a bit of a decline, even in previous year. They really went hard on some lower rates early as a first mover. But ultimately, these occupancies are super crazy high, right? They had a lot of room in OC, and they really milked it. And so you can see their OC indexes were through the roof, which led to RevPAR indexes of 3x. Crazy. Now, the washout is in Q1 of next year, can they hold a 3x the market in RevPAR? This will be tough to hold on to. They killed it because it was a weird, COVID, made a great decision, and drove OC. Now you could say, well, could they have drove that same OC without these rate shortfalls? Maybe, but in the end, that's the art and science of revenue management. In the end, they were happy with 3x index. That wasn't typically what they did. And, they're at a ceiling here, right? So they have to grow rate faster than the market because they have very little room to grow OC next year. So this is where that percent change is also just part of the story.
Heather, I'm curious if you go back for 1 second.
Sure.
So to that question, I think one of the challenges of revenue management is trying to discern whether you did set the correct strategy, right? Let's say your performance improved. Could you have done better? That's the existential question of revenue managers everywhere, in my opinion. Mm-hmm. Can I evaluate other people's RevPAR index and see if there was a better strategy in that? So if someone had even a higher RevPAR index than me, could I look at their strategy, or does the RevPAR index help me pull apart other strategies that I was not able to pursue to understand that question of did I set the right strategy? Because I'm just chewing on that a little bit. It seems like it might be possible.
This isn't a great, but let's take this week of March 20th. Mm-hmm. I wasn't able to. So with the similar rate strategy, of being below market and rate, I didn't achieve quite the same OC levels. So you could say, well, should I have done something different here? Was there opportunity to do like 3x the market? So you could dive deeper on that week to do a little more diagnostic. Was it that had you gone a little lower, was 0.5 or 0.6 like really more the magic spot? And if I was at that low of an ADR index to the market, could I have driven another 10, 15 points in OC? That's what we're talking about here, right? And like, this is the rate sensitivity, price elasticity conversation. Seasonally, that can change. Unit by unit, that can change, right? We're not giving you here, what are you looking at certain bed type? Are you looking at a whole portfolio? But if you can, when you are using richer logic reporting like this, it's like a book, right? We're helping you with your whole narrative to get to like these answers. And I don't know that you would ever, you'd have to know the CompSet's actual end data, I think, Andrew, to like really do what you're saying. But you can get pretty darn close by going to those levels deeper.
Cool.
And comparing weeks and like looking at length of stay and, doing a little more diagnostic. Did that help?
Yeah. It did. I'm curious. I think you're right that the right data set's required. I think there's some combination of key data and Wheelhouse that probably helps get you there. Of course, this is a new terrain for us to move into, both our partnership with key data as well as CompSet. So I'm curious if we can help unpack the RevPAR Index for folks to say, here was the best strategy that would have optimized your springtime cut rate at this point, et cetera. We are obviously trying to do that all the time, but putting these tools in people's hands is really interesting. So kind of something I'm just chewing on. But
yeah. And there's so much more, right? To like knowing the booking windows and like what did being a first mover mean, right? And you have to know that for your market, and you continue to learn, right, week over week. And so like we've said, historical doesn't necessarily inform future, but how can you like look at what's happening in the future, other data points to like make these decisions? Because it's not black and white. Being 0.5 index and rate can drive maybe enough occupancy in a certain season. In another season, you might just like be leaving total money on the table. Right? Like you have to figure out, or for a unit type, for your 2 beds versus your 5 beds, there's a different way you win in RevPAR, different formula. So yeah, I know that was a lot, but ultimately when you measure this way and when we help you create these views using the data sources that make sense for you. And again, the beauty of Wheelhouse is it enables you to unlock what you need to curate it and craft it specifically for you. And that this can be the most important metric for a few things, right? Like if you outperform your market or your CompSet, you're obviously earning more money. You can use this to attract more and better inventory and grow your business, and ultimately also rate to raise capital, right? That this is proof that you are running a business that outperforms and you're running it better than everybody else.
Yeah. I think I look at a decent amount of fundraising material. The teams that speak to, hey, we doubled revenue, that actually doesn't mean much. Hospitality, accommodations, like we work in a business where relative performance is everything. It's what dominates hotel metrics, right? How did you perform against market? That's the entire point of Smith Travel Research. And in our space too, Heather's team is really kind of pushing that professionalism and the awareness of these metrics. But RevPAR Index will ultimately be probably the strongest indicator to investors, to even banks at some point. Like, how can we finance expansion of your business? This is what they'll look to. They'll say, you're clearly a better operator because of RevPAR Index. So yeah. It is a language that those who want to expand their portfolio are going to want to be well-versed in speaking.
I love that. And yeah, it's proving like you're a better operator and a better marketer.
Great point.
Yeah, your whole organization.